You've been critical on issues like antitrust and societal contributions or lack thereof for Facebook, but it was always the financial performance was never in doubt. Now, that's not the case. The stock is down more than 60% so far this year. What do you think is going on?
So, Sarah, I want to build on what Julia just said. I think there are three headwinds that remain in place that started a few quarters ago. First is the impact of TikTok. TikTok has essentially taken all of the young people who in prior years had been going on to Instagram. Instagram has been the growth driver at Meta. And so TikTok's actions there are really dangerous for the stock longer term. I think in the short run, it's also an issue, but it becomes a bigger problem with the passage of time as the Instagram audience ages. The second issue is Apple's application tracking transparency product, which essentially has made it easy for Apple users, who are more than half of the U.S. cellular marketplace, to opt out of having their data shared with apps like Facebook. And that Facebook announced, was it 6 months ago, that the impact would be about $10 billion this year. I imagine Facebook is doing things to work around this, but it remains an issue. And I think it will remain an issue for the foreseeable future. And then the third problem is the investments in the metaverse. And those are voluntary, but they've been running, $10 billion a year? And when you put those things together, the total question here is really about investor expectations. Facebook's clearly been guiding expectations downward. Have they guided them down enough so that the stock doesn't get spanked?
In that context, I was curious what you made of Brad Gerstner, if you saw it, of Altimeter Capital. He wrote an open letter to Mark Zuckerberg, an investor, saying you got to reduce expense headcount by 20% and cut the spending on the metaverse to no more than $5 billion per year, so about half. Is that something you think Zuckerberg would realistically do with control of this company?
Well, I have no idea. I haven't had a chance to talk to Mark in a few years. You can imagine I have not been particularly popular around there. But my observation is this. I do believe that Meta's strategy in the metaverse is actually not one that's going to work. History shows that in tech, if you want to be really successful, you start with a very narrow focus and do one thing spectacularly well. And after you build a large audience for that, you then expand. What Meta's trying to do is to create an entire metaverse, the whole 9 yards, with no special features. It's really an operating system for the whole virtual reality environment. That's an unbelievably difficult thing to do. They will eventually be successful, but I don't think on a time frame that's interesting to investors. And I think they could burn literally $100 billion in the effort without actually having appreciable positive results. I don't know that that's what's going to happen, but I think that's what the danger is. And I think the other problem for Facebook, and this is in Facebook product and the Instagram product, is that they're in danger of negative network effects kicking in, which is that as the population of people using the product ages, the content gets less interesting. As it gets less interesting, people spend less time on the product, which causes the content to become less interesting again. And you get this circular thing going on, which unwinds all the positives that built up for years. And I don't know for certain that that's what's going on, but it certainly appears that way. And the way that Mark is going after it, the kind of headcount freezes, the expenses reductions that he's been talking about, those are really bad for morale. And I can imagine that inside Facebook, it's gotten a lot harder to recruit and a lot harder to keep the employees really focused on their jobs.
Tell us how you really feel, Roger. Instagram, I think, is still very relevant. Mike, just on the stock, it's down more than 60% year to date. It feels like everybody hates it, which may be the one thing it has going for it.
Yeah, definitely.
Investors have acted as if they hated it because they've been selling it down. The street, unfortunately, is still a little bit kind of clinging to the whole valuation story. There's still a net 60% buy ratings on it. But I think in general, what the stock has been telling you is that the market believes that the company's been over-earning, that it's a down path from here in terms of profitability, because otherwise it wouldn't be trading at 10 or 11 times. And they're very concerned about the zero or little foreseeable return on this capital that's being spent strategically. So I think they want to see cost discipline that's persuasive, as well as some signs that maybe they're withstanding the macro pressures on digital ads in the near term.
Well, we'll leave it there with you, Roger, because we've got to go to the bell. But thank you very much for joining us ahead of those Meta results. Roger McNamee of Elevation Partners.